The Calgary real estate market has no sign of slowing down, and in fact, this is one of our tightest markets since 2006. So in today's video, we're going to be looking at the recent market update for Calgary for the month of March. Hello everyone, my name is Ryan Hawkins. I'm a local realtor here in Calgary. We're here in this channel, I do market updates, local news, community tours, and house tours. And if you've learned anything from this video, all I ask from you is to click subscribe. And if you are interested in speaking with me directly one-on-one about buying or selling here in Calgary, you can contact me through the first link in the description, and you can book a call with me that best fits your schedule. So we're going to be looking at some recent numbers, and we're going to be focusing on 5 different stats. That's going to be the average price, the sales, the inventory, the days on market, and the sale to list price ratio. But before we do that, we have to provide some context about what happened in March to help you understand what is going on and give you some overall stats. And so we have a quote from our chief economist at CREB, and one of the things she said that really stuck out to me was this: "We have not seen March conditions this tight since 2006, which is also the last time we reported high levels of interprovincial migration in the months of supply below 1 month. Moreover, we are entering the 3rd consecutive year of a market favoring the seller, as a 2-year spike in migration have driven up demand and contributed to the drop in resale and rental supply. Given supply adjustments take time, it is not a surprise that we continue to see upward pressure on home prices." Now let's provide some numbers as to what she was saying. Last month in March of 2024, our sales were at 2,664 sales, which is a 10% increase year over year, with new listings at 3,172, which is a decrease of 4.3%, and the inventory is at 2,532, which is a decrease of almost 22% year over year, with the months of supply again being below 1 month, which is a decrease of almost 29%. Now, basically what those numbers are telling me is that there is not a lot of homes to buy, not a lot of new listings coming, and there's a lot less choice for buyers to pick from. And so because of that, this is what is happening with the prices. And as I will bring up on my screen, the total residential benchmark price is just under $598,000, which is an 11% year over year increase. The detached price is up 14% year over year at $739,700. I did say in my predictions video that this year detached homes would top out at around $750. Well, I'm looking like it might surpass that. The semi-detached price has increased 13.6% year over year at $658,000. The row market, which is our busiest market in my opinion, has increased 20.4% year over year at $448,700, and the apartment price, which is another busy market, at $337,700, with a year over year increase at 17.1%. And so with that being said, let's look at what our districts are doing in each individual quadrant. And as you can see, everything is up at least 11%, except for that city center, which is still up 5.4% year over year. And as you can see, the Northeast and the East are continuing to be our biggest drivers, as they are our most affordable markets, with the Northeast having a year over year increase of 17.3%, or it has risen to $516,500, with the East also rising at a whopping 25% year over year at $436,200. And continuing to look at the overall market and looking at the year over year differences, as you can see here. Again, looking at the sales, which we already spoke about, was 2,664, with new listings actually being low than March 2023 at 3,172, and the inventory again was below by 21.73% at 2,532, and our months of supply again dropped by almost 29%, being below that 1 month at 0.95, which, if you don't know what that 0.95 means, if you look at a 30-day total, it is sitting at about 28, 29 days of total inventory on the market, which means that if we didn't list another home from now, it would all sell out in about 28 days. Again, the days on market at 20, which is a almost 25% decrease. And the sales to list price ratio for the second consecutive month in a row is at over asking margins at 101.71%, which means that for every $100,000 that a home is listed for, they're going to expect to gain about $1,700. And I'm going to be having a separate video looking at the sales to list price ratio in different price ranges to help you kind of understand what is going on in this market. So make sure you stay tuned for that. Now we're going to look at some individual sales stats here for you. Now that we have all of the overall stats, and you can have a little bit of context about what is going on. And if you would like this individual report sent to you directly, make sure you just comment down below market and I will have that sent to you right away. So starting with detached homes, which Calgary is mostly known for, if you're looking at the year-over-year change, our total sales in the market were at 1,151, which is about on par for what we saw at the same time last year. New listings, we are below 2023 at 1,386. Inventory again is down by almost 28% at 1,113. And our months of supply again staying very tight under that 1 month, around the 28 to 29 days. The sales to new listing ratio is at 83%, which means that 83% of homes that were listed in March sold in March. And the days on market being 20 days, supporting that same sales to new listing ratio. And if you look again at that sales to list price ratio, single family homes are gaining around 102%. And so if you're still looking at that 101.80% and wondering what that would look like price wise, if you were to look at a home that was listed at $500,000 and got this exact sale to list price ratio, it would add about $9,000 to that total list price, being at $509,000. And furthermore, if we look at the average price of a detached home, it has crept up to over $800,000 compared to where we ended 2023 at, which was $730,000. We are already gone past that, about almost $70,000. And our biggest market for that right now is anything between that $500 over to about $800,000. And as you'll notice as I bring up this graph here, in our busiest markets, anything that is below $500,000 is almost becoming non-existent. And you'll see the impact of that has on other different property types, which I'll share here in the video a little bit later. But this is good for you to see and understand, because if your budget is below that $500,000, you are more than likely not going to be looking at a single family home. But this helps you understand what you can buy in the market to be able to focus on and help you get into a home. Now, if we move on to the duplex market or semi-detached market, the total sales were 250, new listings at 260, inventory at 205. The months of supply is right down to 0.8 months, with the sales to new listing ratio being over 96%, meaning almost all of them that were listed in the month of March sold in the month of March. And the sales to list price ratio again is at over 101.65%, with the days on market at 21%. And the average price of a duplex right now is at $689,000, which at the end of last year, it was at almost $508,500, which we have increased by $100,000 on average in just 3 short months. The row townhouse market being one of the tightest markets that we have here in Calgary and probably our most active market. The total sales were 449, which is an increase of 16%, with new listings at 536, which is just an increase of just under 6%. Inventory fell to 355. The sales to new listing ratio is almost at 84%, with the month of supply being 0.79, which if you were to look at a 30-day month, that is about 23 days. And the sale to list price ratio again being the highest at 3%. with a days on market at 17. Now, I mentioned earlier in the video, as the increase in single family homes go up, that would have an impact on other property types. And one of the biggest impact that has been on the row townhouse market. And as you can see, the biggest market for townhomes right now is anywhere between $350 to $550. As I said earlier, we're starting to see single family homes priced under $500, almost becoming non-existent. And in that case, they are having to move to more affordable options, which is the row townhouse market, because again, it still provides space. A lot of time you do get a garage, and sometimes you can get a backyard, which are all things people are looking for when they do decide to buy a home. And so I do think that in this specific market, as we continue to have low inventory and prices continuing to rise, we are going to start to see even more competitiveness in these price ranges. And in the final market, which is the Calgary apartment market, which has had a really good rebound. In March 2024, there were 814 total sales, 990 new listings. The month of supply is the only one that's over a month, but just by 1.06. The sales to new listing ratio is at 82.22%. The sales to list price ratio is yielding just under 101%, with a days on market of about 23. And the apartment average in just 3 short months have increased by about $30,000. And again, the busiest area of the apartment market is anywhere between $200,000 and about $400,000. Again, as those who are going to get priced out of townhomes are going to look for another affordable option, which is going to be the apartment market. We're also seeing a lot of investors invest in this type of market as well, which is increasing the price and the competition. And I continue to see that the apartment market is going to be a strong market going into the future. Now that you've seen these stats, let me explain what that means for you as a buyer or a seller. If you're a buyer in this market right now, you are going to have to expect that you are most likely going to be competing. Right now, we are currently seeing and probably going to continue to see high prices, multiple offers, and a really competitive market among buyers, as we are still seeing a lot of interprovincial migration. And so it is important that in this market, you really understand your finances of what you can afford. That's not including just the budget, but the property type and the quadrant as well. Because if you know those factors, that puts you at a huge advantage among other buyers in this market, because you are able to focus on what you are able to buy and put in an offer that is going to be competitive. If you are a seller in this market, it is incredibly important that you do not get greedy and price your home accordingly. Because even though we are seeing over asking and multiple offers and things like that, we are also seeing homes sitting on the market longer. They are testing the market, trying to get the most amount of money. But the goal in this market is not when your home is going to sell, but rather for how much. And in order to do that, you have to price your home accurately to be able to gain the amount of attention and eyeballs on your home to bring in multiple offers. Remember the goal for selling a home, that 2 offers is better than 1, 5 is better than 4, and 10 is better than 9 offers. And with those multiple offers, you do have a higher chance of yielding higher than your list price. It is not guaranteed, but anything above your list price is an incredible bonus. And so as we do now enter our spring market, it is not uncommon to see more homes on the market, which does mean more competition for you. And all that means to you is that you're going to have to do a bit more to help your home stand out amongst the market to make your home the most desirable in your area. If you're thinking about buying or selling in this market, I do have that first link in the description where you can have a conversation with me privately one-on-one, and you can pick a day and time that best suits you. But until then, I look forward to seeing you at the next video. Take care.